Well, thank you so much for staying with us. Now, the Organization of Petroleum Exporting Countries, OPEC, and its allies known as OPEC Plus have agreed to raise oil output by 137,000 barrels per day in December. According to OPEC in a statement, the decision was announced following a virtual meeting of member countries, including Saudi Arabia, Russia, Iraq, the United Arab Emirates, Kuwait, Kazakhstan, Algeria, and Oman, to review global market conditions and the economic outlook. The statement said, in view of the steady global economic output and current healthy market fundamentals, as reflected in the low oil inventories, the 8 participating countries decided to implement a production adjustment of 137,000 barrels per day from the 1.65 million barrels per day additional voluntary adjustments announced in April 2025. The organization said the adjustments will be implemented in December 2025, while the 8 countries are scheduled to meet again on November 30 to decide on further actions. Well, let's talk more around this, and my guest is an energy lawyer. He's also an analyst in the oil and gas industry, Dr. Ayodele Oni. Dr. Oni, how are you today? It's good to have you join us for this conversation.
Yeah, thank you very much. Sorry, just want to connect my laptop, almost dead. Good afternoon. Just give me a moment.
All right, then. All right, then. So thank you so much, Mr. Oni. If you are there now, what do you make of this move by OPEC Plus surrounding what's been playing out with regards to raising oil output and, of course, holding on for first quarter of next year?
It's good and it's bad. You know, OPEC is a cartel, and the idea is that they want to manage output and they want to manage cost or pricing too. You know, so they've been implementing cuts, including Nigeria, for a while, right? And our own quota has been 1.5 million barrels per day. You know, so the challenge is that it may have significant constraints on our revenue ambitions, save for if we can do more around our local refining, which Dangote is doing. I understand he wants to increase the capacity of his refinery to 1.4 million barrels per day. And there's been that debate that OPEC quotas shouldn't even impact local refining. Whatever crude is produced locally and is refined locally should not count to our quota. So if those sort of arguments can be pushed through successfully, the impact will be more limited, because we then are able to refine more and even sell, be net exporter of refined product. So it depends on the actions we take and the steps and how quickly we can take those steps. Otherwise, it could have an adverse effect on us.
Now, looking at our own plan to increase production and all of that, do you see this also is it feasible, considering the challenges around that space?
Well, generally speaking, it is feasible. I think that in our 2025 budget, we had 2,006,000 barrels per day. I don't think that we've met that. We've been doing around 1.8, maybe even 1.5. It's always oscillated, right? What we do. But more recently, with the divestments that have happened and government supporting closing those divestments with consent and regulatory approvals, we see that Seplat is producing more. We see that Renaissance is doing more with the previously owned assets of Shell. So I see that we're making progress, but we're not quite there in terms of volumes. That's where we are. Ambitious aims, but yes, it's always good to aim for the sky and then fall, or aim for heaven and fall on the sky, than to aim for much less. So I think some of our goals are ambitious, but we will, as usual, get close at the very least.
So you still think that, well, like when you would say we need oil to diversify, even if we're talking about diversifying our economy, we still need oil to diversify. But there's a lot of work going on down in our oil and gas industry now, and we still continue to see this level of, should I say, that our industry continues to be attractive to investors, better than it used to be. Many would talk about the executive orders and all as instituted by the SA to the president, and of course, efforts being made generally along that line. So how does this come to you? What do you think? Do you think we'll be having more of investments coming on, moving on, talking about stability that was also seen in that segment of the oil and gas industry upstream?
Yeah. I mean, the truth is that challenges bring out the best in us, right? So some of the things we find internationally, those challenges around logistics, the vagaries of doing international trade, particularly around crude, particularly where you are to import, is one reason that we have the Dangote refinery, right? So that it's an incentive. Those sort of issues can be an incentive for domestic reforms to be able to produce or refine more locally, have more used locally. So I think that with what we see and with the issues you've raised, there's that potential for us to do more locally, right? I think that's what I see. I see that the activities or the steps taken by the president, and anyone you ask, they'll probably tell you where we've had the most success under this administration has been, apart from, of course, raising revenues, it's been in the oil and gas industry and getting more people to invest and have confidence in that industry. You know, some of the IOCs are beginning to invest more. You have Shell, you have a number of those companies coming to invest, whether it's in gas, whether it's in liquid hydrocarbons. There's more investment. And if you have the data, you see that rig use recently has increased substantially. And in the last few months, everyone says that at times it's quite difficult to get rigs, unlike what you had before now, where you had a lot of people shutting in or capping their wells, you know. So I think that regardless of what the OPEC does, it's when we rely only on exports and our quotas that we then begin to cry. But if we can do more locally, be a net exporter, the steps government has taken with having more confidence in that sector could lead to big things, regardless of what they do.
Oil prices have also been, let me say, there's been a flip-flop also in that market, and many say as we move towards the end of the year, well, supply of crude, you've talked about it, Dangote refinery increasing production and all, but just generally about the oil market itself, do you think that will stay above, let's say, $65, $70 per barrel as we move to the end of the year?
It depends. It depends a lot on what OPEC also does. As you move towards the end of the year, you know, typically demand would increase. There'll be more use. People want to produce more. There'd be more productive activities because of the festivities, right? So I do not think that the prices will go much further down. I think it will oscillate around that $60 range. Because production, I mean, if anything, it will go up a bit, right? Unless you know how it is. If something just happens in the Middle East or something happens in the Gulf, you know, then it could impact, or if the risk around the US going to war with Nigeria does increase or escalate, then it could impact oil prices positively. I mean, not necessarily a great thing for us if we're on the receiving end, which I doubt will be the case anyway. So I think that as things stand, prices will just remain generally stable. Might go up, but it's unlikely to go much further down because of production that happened between now and Christmas.
Let's talk about refining now, because you also talked about Dangote's plan to increase. But many will also talk about other modular refineries and all. If the crude capacity increases for that refinery, what do you think of supply to other modular refineries, which we also expect to, you know, be productive as they also have licenses that they need to operate?
Yeah, a number of them. For example, Aradel does have a refinery, and I think Aradel, no, I know for a fact that Aradel does have oil blocks, some of which should be feeding the refinery. Same for Walter Smith, you know. So I think that from the active modular refineries, I'm not sure they are struggling with crude that much because they also have supply sources, and it is general knowledge, right? It could always be better, and the more we produce, the more availability you have both for Dangote and for the smaller refineries. I understand that BUA is also planning a refinery that wouldn't be marginal, would be a much bigger refinery, not as big as the Dangote refinery, right? So as long as we can produce more, it means that we can refine more locally and we are more integrated nationally. We have production happening nationally, we have refining happening nationally, and we can sell. And we could even be export to African countries around us, Niger, Benin, Togo, even Ghana, right? So if we can keep more crude locally, produce more crude for local use, it's more beneficial to us. And I always use Switzerland as an example. Switzerland neither has cocoa nor even crude, but you find it's the orb of refining, it's the orb of refining even gold, refining oil, orb of refining cocoa to chocolate, right? So we can be that, right? Plus, we even now have the base resource, which should give us a better advantage. It's always been a leadership challenge and policy issue, right? And many a times, even when we have those good policies, implementation is also a problem. So I think it's what we've got that natural advantage, you know, since we have crude, if we can refine it sufficiently and be next exporter. Country, I always say country like Switzerland is a good example. If you look at the Netherlands too, you find out that countries such as those do not even have many of these resources, but are the hub of refining them, adding value to them. They buy from us or wherever else, add value, and are richer, the better for it. So if we can add value to our resource, produce more, and refine more locally, good for us.
Before I let you go, let's shift to look at the pricing of petroleum products. At the moment, fuel is selling for about 920 naira, 25 naira in Lagos, depending on where you're buying. And I'm sure outside Lagos, some cases, some will be selling for above 1,000 naira. And that, again, is that flip-flop in the market that we've seen. Many analysts like you will say, well, thanks to deregulation. But let's look at this, and also for gas. That's been having, yeah, I think it's a bit, it's declined a bit, but there's also been that outburst, and, you know, talking about the increase in the price of gas too at this time. What do you make of all of these prices as we move on? Energy cost seems to be very, 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 very important, and it affects all that has to do with economic indicators.
Yeah. In other climes, energy prices determine whether you win or lose elections many a times. That's why in the US, in the UK in particular, energy prices, right? That's why you see at times subsidies provided for energy prices. Now, I think that once you deregulate, there was something known as an equalization fund prior to now, where petroleum product prices was similar everywhere in the country, right? But with removing the regulation, the farther off you are from the base, from the supply base, the more expensive. Further you go interland, the more expensive because of the cost, the logistics cost, right? So prices are not going to be the same unless there's some form of equalization or some form of subsidy, which is probably never going to happen again, right? So those prices are high. And I think it's always an opportunity. I always try to see the cup half full rather than half empty. It's an opportunity for more people to buy electric vehicles. And, you know, government has done a few interesting things. I think the government isn't speaking enough about some of these interesting policies and implementation of those policies. There's something called the import duty exemption. Can get import for your electric vehicles. You don't have to pay customs duty as long as you can get your import duty exemption, and your lawyer can get it for you. I mean, you know, it's something. I mean, I do without trying to advertise, but lawyers will get your import duty exemption for you, and you bring in your gas equipment, your LNG equipment, your gas processing equipment, electric vehicles, solar panels. So it's an opportunity for us to look beyond petroleum products is what I'm saying. The CNG, which is cheaper, you know, and there is also buying EV vehicles. You could even get cheap ones in countries such as China, right? And you pay no customs duty. Like if you bought a car, if you bought an S-Class now, you probably be buying a used one for $80,000, a new one for $150,000, $80,000, $200,000, depending on the options. But if you bought an EV of that same, you just pay that. You're not paying another 100 million customs duty when you get into Nigeria. So it's an opportunity for people to then begin to look at EV vehicles and the alternatives to liquid fuel. That's just the way I see it. But that said, competition always encourages more people, and it goes to this 15% surcharge. You know, you can debate the arguments on both sides, and I see both sides, right? As long as you produce sufficiently in the country, it may not be so much of a problem, and you have sufficient competition. But if we don't, then it could lead to price increases, right? But first is security of energy supply. Do we have enough petroleum products? Would we not have a Christmas where we are queuing, which used to be the thing prior to the last 2, 3, 4 years, right? We had queues every December. So that's eased now. It's just that we have to pay more. But there are then options, you know, CNG, LPG, electric vehicles, and all of that. And I'm not saying energy prices should continue to go up. Then government needs to do more. It's a broader economic issue, right? More jobs, people should be better paid. At the end of the day, it will reduce it. And like I'd always said, if electricity is 24 hours, you're not going to be buying PMS every day to power your plant. If you have other means of transport, you may not be using your car every day, or use it up to a point, put it on a trawler or some boat, and you can take it wherever else you're going, and reduces the quantity of PMS you're using, you know, and now we almost refine sufficiently. So if all those three are in place, oil prices will still matter, petroleum products, but won't be as critical or as important as they currently are.
Dr. Ayodele Oniamos, thank you so much for your time. Interesting conversation as always around our oil and gas industry. Do enjoy the rest of your day. Energy analyst and lawyer there live for us.
Thank you very much. Thank you for having me.
All right, then it's time to look at market figures now. And my colleague Effiong Gekop is live in the studio for that conversation. Effiong